The US and China just shook hands on a new trade deal. But here's the kicker. It looks more like a trade flop than a deal. Let's break it down. What was announced wasn't a groundbreaking agreement. It was a return to the previous status quo. A revived trade truce, as they put it. Not new terms, not lowered tariffs, just the same thing with a fresh coat of paint. And Wall Street noticed. The real pain points are still very much alive. Starting with tariffs. The US is locking in 55% tariffs on all Chinese imports. China? Only hitting us back with 10%. So, what do we get in this truce? Two things. Chinese students can study in the US again. And even more crucial, American companies regain access to China's rare earth metals. That might sound niche, but these metals are the backbone of modern technology. Smartphones, EVs, fighter jets, medical devices, they all depend on them. And here's the power dynamic. China controls 90% of the rare earth metal market. When they paused exports last month, Ford had to literally shut down a factory making Ford Explorers. No metal, no car. That's leverage. But there's a catch. China's allowing rare earth exports again, for now. The deal includes a 6-month expiration. After that, it's up to China. So while the US gains temporary access, Beijing holds the clock and the power. Meanwhile, the US used to flex with high-end AI chips made by NVIDIA, but now China is developing its own. So the leverage play just shifted. America might lead in innovation, but China holds the raw materials that power it. Bottom line? This trade truce isn't a peace treaty. It's a pause, and one that heavily favors China. The US may have the tech, but China's got the materials, and that's why the markets weren't exactly cheering. This has been your Daily Shot of Finance.